Hello, and welcome to the Investing from the 9 to 0 podcast starring Josh Yance. Today we're going to cover the company Lululemon. What I'm going to cover in this podcast is the background information on the company, the fundamentals, the upcoming earnings reports, the company's various prices, their competitors, and finally the top news stories. To start, we're going to include Lululemon's company statement. Lululemon Inc. engages in the designing, distributing, and retail of athletic apparel and accessories. It operates through the following business segments. The company operated stores segment comprises Lululemon and Ivivva brands and specializes in athletic wear for female youth. The direct-to-consumer segment is involved in e-commerce business. The company was founded by Dennis J. Wilson in 1998 and is headquartered in Vancouver, Canada. If you're wondering what my specific vocabulary means throughout my podcast, tune into my first episode where I explain in-depthly more about what each certain topic means. Moving on to Lululemon's fundamentals, and specifically their valuation, Lululemon's price-to-earnings ratio is 49.81 times. Now that is greater than 97% of the other companies in the apparel and accessory industry. Lululemon's pricing strategy is to focus on the more name brand athletic wear. So when people see that someone's wearing Lululemon, they know that person is either wealthy or a person of status. Moving on to the price to cash flow ratio, Lululemon's price to cash flow ratio is 23.07 times. Their profitability, specifically their gross margin, is 55.87%. That is better than 91% of the other companies in the apparel and accessories industry. That is an incredible gross margin percentage, but again, due to the fact that they are focusing their pricing strategy on products of status, they are able to obtain this higher gross margin. Lululemon's net profit margin is 16.22%. It controls its costs better than 100% of its peers. Now that is an incredible ratio because they are able to cut back their costs and obtain a higher profit margin. Lululemon does not have a dividend also. Moving on to Lululemon's earnings report on March 26, 2020, the analyst projected earnings of $2.24 per share. Lululemon beat expectations at $2.28 per share. Now you might be wondering, how were they able to beat earnings when they were right in the midst of the coronavirus? Well, to answer that question, Lululemon was able to beat their earnings because the full effect of the coronavirus economic toll has not truly affected their company yet. Now, this was big news at the time because Lululemon reported their earnings report beat 3 days after the lowest dip in the overall market this year because of the coronavirus. Lululemon's projected earnings for next quarter is 26 cents. That is drastically lower because in the last earnings report, it is reporting $2.02 more a share than the projected earnings for next quarter. I personally might think it's a little low, but as an overall gist, I would say that the general area that the prediction is at is fairly accurate. With Lululemon's high pricing strategy, it will not be that successful in this economic recession time that we are currently going to be in. The high pricing will also not be a high priority for the people who have filed for unemployment, which is totaling at about 36 million people as of May 14th, 2020. Lululemon's final price today was $237.15 per share. The 52-week range was $128.85 at the low on March 18th, 2020, and at the high, $266.20 on February 20, 2020. The top competitors Lululemon faces are Nike, Adidas, Under Armour, Puma, New Balance, Athleta, and Fabletics. More specifically, Nike and Adidas are some of Lululemon's top competitors because they produce the same kind of goods but at a lower price than Lululemon. They are also name brands and produce high and medium quality goods. Under Armour, Puma, and New Balance produce the same goods as well, but they don't have the name brand status that Nike, Adidas, and Lululemon have. But they also produce the high and medium end goods that people who work out would like to see. Athleta and Fabletics, they produce the same goods. More specifically, in the women's workout sector, they price the same goods for arguably the same quality as Lululemon for a drastically lower price than Lululemon. Moving on to the top news stories. On April 16th, Lululemon released that it will be losing their CFO, which stands for Chief Financial Officer, on May 8th, 2020. Their current Senior Vice President and their Controller will lead the financial team as they are searching for the next CFO. The next top news story I'm going to be covering is how Lululemon jumped from $140 a share to over $200 a share in 1 month. Was the recovery too quick? I think yes. Lululemon is a name brand status-based company. They produce high-end workout clothes, but what investors aren't realizing is that the brand name workout clothes that are extremely expensive are not going to be on the top of the list for the about 36 million people who are currently unemployed in the United States. Those 36 million people will be choosing food and other necessities over their Lululemon clothing. Even if they do need clothing, they will resort to a cheaper option other than Lululemon. For our final top news story, it comes in at a little bit later date. Back in July 11th, 2019, Lululemon opened up a 20,000 square foot store in the middle of downtown Chicago. This store is more than just a clothing store. It includes a restaurant that serves smoothies, salads, burgers, and beer. It also includes a workout studio for yoga and HIIT classes, as well as a meditation space and some one-of-a-kind items that are only in that store. Now that's not even the craziest part about the store. Lululemon lets the customers test out their gear for free during those workouts. Now you might be wondering, how are they going to be making a profit that they're going to be losing on these clothing items? The catch for their workouts is you have to buy a package deal for the workout clothes. You can't just go to one individual class whenever you want. You have to buy, I believe, a package of 10 classes at a time or more. Next week, I will be covering the T-Mobile and Sprint company merger. This company merger was arguably one of the more debated mergers in recent time because there were thoughts that T-Mobile and Sprint combining would cause them to become a monopoly in the cellular service provider industry. That concludes this episode of the Investing from the 9 to 0 podcast starring Josh Jansen. Make sure to like and subscribe for more content like this, and I'll see you guys next time.